Welcome to TradeTheNBI.com. This is John. This report is for the 1st of May. May Day celebrations here in Europe, not so much in America. But the reality is, for all the hype and everything, we started April, you know, right about here, and we finished it pretty much close to the same spot, slightly lower. But it was much to do about nothing. Um, but that's okay because there was a lot of activity in between it. And this was consistent with what we were seeing from MBI, with Magenta still leading. Shorts unable to drive it. We did see some intraday move that we were looking at where we expected the 50K, the 50% Morganacci line would break if we got below it, and did in fact do that. But then there was just a turnaround buy. And as we look at the intraday chart, we'll see it was pretty clear. So poised with the complete collapse here of MBI white short. So not bad. We had the dip of steel coming back to the zero mark. It didn't quite cross below where it did on the Nasdaq. So that we talked about that, the Nasdaq being the driver of what was going to be the next rally coming forward, and green still over red. So these are all net positives, nothing too dramatic, but the shakeout not getting back towards that positive is problematic for maintaining it, or at least continuing to drive in a strong, forceful way. And so here was the difference on the DOC for the NASDAQ, where we had this dip of steel coming below and then back above. That transition is usually very strong and really drives price to the higher. That's why we're seeing already a big move in the early morning futures, but no question that it was all still positive from a MBI reading. And of course, you talk about the shakeout, that rising gold has that impact, but you really would have gotten a really strong potential drive towards the 100% likely if we had been positive shakeout. -5 is close. It's still not there though. It's got time to get there. But it just means when you're going to hit resistance, you're probably going to be moving sideways a little bit as you impact those areas. And that's just part of what it is. Treasury's not doing a thing. They're just caught in this malaise because, again, this is that problem where that narrative between the idea that there was going to be stagflation and you were going to have all these problems, and they're not materializing. And the numbers coming out of the Fed, their core CPI and everything that they use to justify this whole stagflation argument that Powell was, concerned about, not materializing. In fact, the bottom side of their scales, and that's problematic because they've been holding off on rate cut, and they're going to purposely be slow. And Trump wasn't wrong. I mean, they're doing it on purpose, just to delay things as much as they can, much like the courts, all those situations delaying things. But oil moving in the right direction, and if that continues to plug as it looks with the move towards the zero is evident from the readings at this particular stage. Those are all positives, and that is going to be, when you add in the investment and everything over time, it's going to really have explosive value. It's going to make everyone wonder, why the heck would you be in euros and that when you're getting a better yield out of the dollar at this particular stage, as well as the fact that they're not going to continue to cut because the ECB has no choice but to cut to stave off the continued recession in the Eurozone. Go figure. It's also problematic for gold because it doesn't indicate any kind of major tension. Now, of course, you still don't have certain deals. So as long as that persists, all we've gotten is just a fill of the positive extremes coming back. So gold's not dead by any stretch because you haven't reversed or created a deflationary environment in any way, shape, or form. Bitcoin's still going to be that store of value in between. And I think this again becomes that easy parking lot where if you're unsure and don't want to be in a particular currency, you've got a nice avoidance zone right there, and continues to show resilience that you're not seeing from an ETH. So the separation between the cryptos is starting to express itself. So what we saw early on was the fact that we had the MBI white spike from day and a half ago, but Magenta, it stayed relatively strong above the yellow, and then it finally broke down right before the start of the yesterday, and that continued. And once we had a pretty clean cross of the red in that, it really started to accelerate. And that was the break below the 50. We expected to move to the zero, and I commented on that. That was the expectation. Put the chart up on Skype chat, which obviously is going to have to move to these Microsoft Teams if I can figure out the best way to do it. It's very strange how it works. It looks like Skype, but it's not quite. Interesting. But we got the turnaround, Magenta crossing over, and that happened just before the 23% cross, confirmed itself on the 23% cross. So that was pretty clean. You had the full reset here of orange below DOC. So all those configurations were set up for the move. And once you got to the 50%, you were still riding clean. You had a brief moment of white spike, and that caused a little bit of perturbation right there around the 50%. But Magenta staying above, and then shorts just fell off. And as they fell off, that was the cover rally that took us to the highs and actually is exceeding and continuing to do the same here in the post market, up plus 60 here in the European session. So for all of the negative, we talked about this. There was the unlocking of buybacks as well as the general lack of confirmation that tariffs were causing a problem, and this foolishness of these people who touted it as a given certainty that it was going to cause us. Now, will we see some kind of supply chain disruptions or anything later on? There's potential. Just depends on how important those products are to Americans that came from China, and whether there are substitutes. And will people just hold off, or will they be willing to pay the extra price? We already see a huge drop off of freight coming from there. Now that's going to have some interesting impacts on shipping costs and that. And so you end up with kind of a deflationary temporary environment. That would be a very interesting development. But from an intraday standpoint, you can see how that's selling. It's pretty strong, and then it was just a strong reversal, and that was just options playing themselves out beautifully, killing both sides of the equation. Then by the later part of the day, this current start of the month started to build here, and you can see that's been a strong move from the call side. And it's just embarrassing for all these economists and that who said that they were certain of what was going to happen, and I told you they were idiots, and they proved themselves to be exactly what they were. It's just a complete misread of how things actually work in the real world versus their models. And it was this idea that these blanket tariffs were on everything, like a VAT exists on European goods, where everything is affected. No, because we're targeted. You have other alternatives, and as long as that exists, you have greater free market access. So it just made no sense, the arguments. But we can go on forever about that. It's not relevant. All that's relevant is that our readings are spot on, and we're continuing to follow it as we go. As always, though, anything relevant, I'll put on that Skype chat. But have a good one. Trade well. It's pretty straightforward for us.